Good afternoon and happy Thursday, everyone. It is Scott Woolridge with River Place Capital. It is Thursday, October the 7th, and just wanted to take some time to discuss what we saw in markets last week, discuss the sell-off that we saw in markets last week. Did the volatility creep into this week, and where do we see markets moving from here? So last week, the S&P 500 had a pretty tough week. It was down. It was down 2.6% for the week. And one of the very interesting things about the week, though, however, was the mid-cap indices were only down 70 basis points, or 0.7%. But the small caps, as measured by the S&P 600, were actually positive 1.1% for the week. So continuing back to that leadership mantle that we've been talking about for the past couple of weeks that we saw back at the beginning of the year. Also last week, growth really underperformed value. Value very significantly, even in the downside, outperformed the growth sector. And a lot of what caused the big sell-off is the large cap tech names really finally rolled over last week. You saw some controversy come up with Facebook, and you saw reports in the Wall Street Journal about how Facebook and Instagram can be very detrimental to the mental health of the adolescent ages, mainly specifically young women between the ages of 12 and 18 years old that are on the platform. And so you saw some rolling over and some selling in these large cap tech names. And remember, the top 5 market capitalization weighted companies in the S&P 500 comprise about 23% of the overall index. So whenever there's big moves in those names, you're going to see the index itself really significantly underperform, maybe the majority of the average stock within the S&P 500. So you saw that downward pressure coming from the large cap tech names. And then over the weekend, we realized that we were getting closer and closer to the debt ceiling being reached, and it didn't look like that we were going to have a deal get done, and that by October 18th we would be out of money, and that there would be no debt ceiling agreement between Republicans and Democrats in Congress. And the market really sold off hard on that news on Monday. And you saw the market down over another percent Monday, adding to the losses that we had from last week. However, we started the day off pretty down yesterday. At one point in our lows yesterday, we were down over 420 points on the Dow Jones Industrial Average. But throughout the day, there became some optimism that we were going to get a debt ceiling agreement, and at least one would be reached to fund the debt through at least December. And as the afternoon wore on, we did get a deal with Republicans and Democrats in Congress to raise the debt ceiling. And then you saw markets really rally and move higher off of that news. And as we sit today, markets are up significantly higher today because we have that debt deal. That has been one of the headwinds that we've been talking about that has really been holding markets back from moving forward, is were we going to get this deal done, and were we going to default on our debt? And it looks like that's not going to be the case, so it gives continued optimism. We're also starting to head into earnings season. Next week really kicks off earnings season. We've had a couple of earnings reports from some consumer goods companies so far, and what we are hearing and learning from that is that the consumer is still very, very strong. But the question is, are companies going to be able to manage the supply chains? As we've seen a bunch of earnings revisions come downward, for the first time in a long time, we've seen negative earnings estimates revisions coming out, which is not normally the case when you go into the third quarter of the year. So are investors going to be willing to overlook some of these earnings revisions downward and look past and understand that the consumer is strong, and that's these supply chain issues that are causing issues for these companies, that we will overcome those eventually? So those are the things that are weighing on the minds of investors, but we are moving higher. And as long as we continue to have this debt deal, we will be continuing to monitor as a company the earnings reports that are coming out. So if you have questions as we're heading into earnings season on how to position your portfolio, or questions overall about how to manage this volatility that we've seen in the marketplace recently, give us a call. We're easy to talk to. We love to talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day. Thank you so much.